thanks, Tim. And I like the way that music came in quite there. So just let me know if that's going to happen, because it might kind of throw me off the stage. Anyway, welcome and hello to everyone in the room, and hello everyone online. Thank you very much, Sustainability Live, for inviting me to be part of the proceedings. And well, I'm looking forward to the next 20 minutes or so, because what we're going to do is go through a little journey of some of the key macro themes that the London Stock Exchange Group are taking notice of, because we really do think that they are very, very important for the economy and businesses that operate within that. So that's what we're going to do. I really would love some questions at the end. I would say the harder the better, but actually I just prefer ones that I can answer. So as we go through, make a note or make a record, and we'll have a little chat at the end, and we'll see what we can do. But before we start, a little bit about, I guess, me and also the London Stock Exchange Group. So I've been doing sustainability for my entire career, and which I feel is a massive honour and privilege, and I wouldn't want to do anything else. So I love what I do, and I've always worked in financial services in the context of sustainability. And for some people, that feels like, I don't really understand. What do you do if you're a sustainability bod in financial services? So hopefully today, I'll kind of shine a light on some of that as we go through. The London Stock Exchange Group, I think most of you will kind of recognise the name, but actually we're a bit more than perhaps people recognise. So let me just kind of give you that context so you can understand where we're coming from. It's actually a very old organisation. The roots of it were embedded in 1698, over 300 years ago, at a coffee shop just near Bank Station. It was called Jonathan's Coffee Shop, and there was this chap, John Casings, who sat there, and he kept a ledger of all the trades going on in the centre of the bank where they were. Anyway, that was a very, very early kind of roots of the London Stock Exchange, which actually became the first, in 1801 was the first regulated stock exchange in London. It was amongst the first in the world. And we continue to be a really important trading venue. We're amongst the most international of stock exchanges in the world, which means that international investors come to London to be able to get access to the equity and debt that are raised on our markets. So we're a really important venue for the global economy. But over and above the London Stock Exchange, we're also home to a massive financial market data and infrastructure business. So we also own FTSE Russell, which is a very, very well-known index business. We also have, amongst kind of a very, very deep data business, so we provide financial market data to 40,000 customers around the world. And we also have a whole bunch of trading solutions and post-trade. So we are systemically important, actually, to the global economy. We're on the watch list of, can't fail kind of thing, so no pressure. But it really starts to demonstrate why we're so interested in the transition to a sustainable economy, because it's our job to work with our customers, and those customers are governments, companies, financial institutions, massive banks, insurers. And it's really, those customers are the ones who are saying we need help and support, and we need new information and new market infrastructure to be able to transition to a sustainable economy. And we also have quite a kind of strong voice in the market as well. And we think it's our responsibility to act on behalf of our customers and the broader economy to be able to advocate for policy which is sensible, practical, and will deliver the sustainability outcomes that we all need. So that's a little bit of a background. We operate, by the way, in 170 countries, servicing those 40,000 customers around the world. We have about 26,000 permanent staff based in over 60 countries. So yes, we are the London Stock Exchange, but we are very, very global. So that's just a bit of context. So I want to talk to you about 4 themes today. And as we go through the themes, we can sort of think about what those themes mean for businesses, and perhaps I can give a bit of a reflection about what LSEG does as well. You'll see that my slides are very limited, and they're very photography-based. So let's just see the first one. So climate transition. This is arguably kind of the bedrock of kind of why we're all here today. And by climate transition, what we really mean is the transition to an economy which is operating on a much lower carbon footprint than we see today. And that in itself creates loads and loads of economic impacts. So if you look at just energy investment itself, so the IEA recently talked about the fact that, by 2024, we're expecting something like $3 trillion to be invested in energy in 2024. And of that, 2 trillion are clean energy. So we're seeing this massive kind of reallocation of capital from traditional sources of energy into clean energy. But that is not a kind of universally true picture around the world. And we're seeing a lot of disparity between different markets investing at different levels at different paces. So lots of investment happening in China, in the US, and other markets, but less investment going in the emerging markets and developing economies. And that's really because actually we're starting off a lower base. And so one of the things that we're talking to our customers and policymakers around the world is about how we kind of get to a pragmatic solution rather than a one-size-fits-all for climate transition planning. So LSEG spends quite a lot of time talking to market participants and policymakers and feeding into kind of new rules and regulations around climate transition plans. And we think that climate transition plans are absolutely vital. One, kind of helping businesses to strategize around their transition. If you've got to write it down, you kind of have to think about what you're writing. But also, more importantly, it's about starting to think about the hardwiring and the financing needed to deliver the climate transition plans. And it's only really when you start writing it down and working out what your organization has to do in order to make that transition to a lower carbon footprint that the pieces start falling in. And LSEG, it's really important that we don't just kind of sit on the sidelines and tell other people what to do. We do it ourselves. So we have a climate transition plan that we took to our shareholders for approval in 2022. And I've got to say, that was a bit of a squeaky bum moment because I didn't really know how it was going to go down at all with our shareholders. But what we did do is we did a lot of pre-engagement with some of our big shareholders to talk to them why we were wanting to set out public targets and why it was really important for our shareholders to get involved and get engaged. And really that's about kind of the conversation saying, well, actually, we as a business are going to have to start changing in ways that perhaps, may not seem apparent, but it's really about our products and our services, and we're going to have to be devoting more time and energy into developing the market infrastructure of tomorrow. So luckily, the result was good. We got a 98.9% support rate from our shareholders, but that was really good because it gave us a pathway to then crack on and start delivering. But what I would say is that even LSEG, we're involved in kind of the transition plan task force, we're involved in a whole bunch of kind of creating the new disclosure rules of the future, but this is not easy. There is, we're creating these blueprints, but practice makes perfect. So we're always unapologetically kind of honest about the fact that we haven't got everything right and that, we'll work on it going forward. So transparency is super important to us. And every year we try to get better in terms of the type of information that we're producing. So climate transition, big trend, of course, really impacting the way that capital is being allocated at a national level and also a business level. And we'll come back to financing a little bit in a moment too. So the next trend I wanted to talk about was policy and regulation, and there's probably oodles of sessions on this over the next 2 days. But I can definitely say it is such a powerful trend that businesses that don't pay a lot of attention to it do so at their peril, because we're seeing kind of more regulation and policy change now than ever before on sustainability. And one of the key issues is that it's not all the same everywhere. So if you're running an international business or you're in an international business, all of a sudden this patchwork quilt of regulation becomes a real headache, actually. And that in itself starts kind of creating kind of an internal impetus to upskill the legal teams and the operating teams, etc., so everyone can start to understand, what's this new rule, what's the new framework, and why have we got to do these things? which means it's so important to kind of upskill and kind of focus on skills and capabilities in an organisation. So that's something that we're doing actually, LSEG ourselves. So, the last 2 years I've been working with our legal teams to really help them start to get on the bus, understand what was going on, and develop those skills in-house within their team. From an LSEG engagement perspective, we spend a lot of time working with policy makers on sustainable finance in particular, and also looking at disclosure regimes. So we advocate strongly for the adoption of ISSB globally. So we're calling on governments around the world to adopt ISSB with a minimal amount of kind of local adaptation at speed. So looking for commitments by 2025. We think it's absolutely crucial that those people who are kind of allocating capital can do so on a level playing field. It's no good to investors or the providers of kind of debt capital if they can't compare the investment opportunities in one region equally to the other. And that is the power of reporting, because it creates this common language and it creates a leveling effect. So a global portfolio manager doesn't really want to spend time hunting about the information. They want a common platform. And that goes on the debt and equity side as well. So it's really important we spend loads of time kind of talking to policymakers around the world about the interoperability of regimes. So, for example, ISSB and CSRD in Europe, massively important that we get to a place that companies who are going to be meeting both of those requirements sort of just have to do it once, right? Because otherwise we're going to be spending a lot of time and management effort and resources on double reporting when actually we don't want to do that sort of stuff. So it's really about kind of pragmatic reporting solutions, etc. The same can be said for taxonomies. So we're seeing taxonomies spring up around the world. It's really unhelpful if something which is classed as green in one jurisdiction is not green in another jurisdiction from an investment and CapEx perspective and revenue perspective. So we spend a lot of time on policy and regulation, both as an advocate but also ourselves internally. And that brings me on to the role of finance, which is probably sort of where I spend kind of most of my time, really, headspace. Because one of the things that's true, I think, is when you look back to the very early conversations on sustainability. In fact, if you look back to 1972, like over 50 years ago, when the Stockholm Declaration was made, there was definitely recognition that we needed to do something, and that international collaboration on sustainability was critical. And ever since, there's been movement towards kind of a more sustainable future. But I would argue that actually the role of capital markets and finance didn't really enter the dialogue until much later. And it's actually within recent years that we really see, for example, at Glasgow at the COP26, that finance really started to kind of take its place on the kind of the solutions side of the equation. And so it was in Glasgow that there was agreements made around the amount of capital that needed to flow into climate solutions, and that effectively the finance sector needed to raise its game. And so there was born the GFANS initiative, the Glasgow Financial Alliance for Net Zero. And ever since, that alliance has been working with hundreds and hundreds of financial institutions around the world around kind of transition planning, what that looks like, what the capital requirements are, what information is needed from those looking for capital to be able to get that deployed at pace. And so we continue, also continues to be involved in the GFANS initiative. Super important. In terms of kind of what we do as an exchange to help companies and other institutions, we've created a sustainable bond market, and since inception in 2019, we've seen 232 billion, that was as at the end of last year, raised on that market specifically for sustainable debt. So what that means is we see governments around the world and companies using our venue to raise capital provided by investors to deploy into their sustainable objectives, into their climate transition plans, etc. And so that's a really, really tangible way to say how we're supporting. And we're also shining a light on the investment upside opportunity as well. So we have this thing called the Green Economy Mark, where we look at companies that are generating over 50% of their revenue from what's classed as green activities, which is very, very similar to the EU taxonomy. And we give them the Green Economy Mark. And the reason why that's important is because it really shines a light and highlights the investment opportunity to investors. Because what we do know is there is no sector called green, right? Green is everywhere. We publish every year a report on the green economy, and it's fast becoming one of my favourite reports because I think it tells a really positive story on sustainability. Often, sustainability is a bit of a doom and gloom conversation, you have to kind of get the energy. But actually, this green economy report is actually a really, really optimistic report because it shows that this is a growing part of the market. And indeed, if the green economy was a sector in its own right, it would be right up there in terms of the biggest sectors that we have. So this is a sector that is growing and is forecast to be between 16 and 20% of the global market cap by 2050. So this, there is a lot of opportunity there. And so we help companies to be able to get that mark and to raise capital. And in fact, we had a company to come and list on this London Stock Exchange the other day, and they had the Green Economy Mark, and they felt that it was really instrumental to them getting more capital at their initial float than they would have ordinarily done. So actually, it's having sort of really tangible impacts as well. And then on the index side, we provide over 120 climate and ESG indices. You'll probably be familiar with the first one of the early ones, the FTSE for Good index. That's somewhat of a kind of predecessor to some of the more complex and sophisticated indices that we run and offer now. But yeah, investors around the world are using those indices to be able to kind of benchmark their investments, track funds, etc. And we're seeing kind of adoption picking up with more kind of investors using those benchmarks as their mainstream benchmark. So those sustainable indices are effectively replacing more traditional indices as more and more asset owners and investors want to align their portfolio to a sustainable transition. The final theme I wanted to touch on was around data and technology, and we think that this is really massive, actually, in two ways. So data is really important because, in many respects, sustainability is a data challenge. It's about information, and it's about the power of information. But we all know that actually we don't have all the information that we need, partially because actually we're still trying to figure out how to measure some of this stuff. And even if we do know how to measure it, we're still working out how to put it all together in a sensible place and sort of compare apples with apples. And so data continues to be a challenge. And we've seen lots of technology providers here talking about how they can help with the technology challenge. And I think that getting the data and technology right in one sustainability strategy is really, really important because it provides management information, it really informs decision-making, and it also obviously helps us kind of meet reporting requirements. But I can't kind of estimate how important data is to this whole challenge. But of course, there is a flip side to technology. So technology can be an enabler to sort of supporting sustainability outcomes, but also the rise of AI is something that we can't kind of fail to talk about, which is obviously, on a net basis, is it good or not? We don't know yet. We simply don't really understand what the power of AI is. And I think there's a number of things that we need to be kind of watchful on about kind of how we use AI responsibly, and we'll see more and more organizations who are sort of setting out their principles around responsible AI. Indeed, we have as well. But also really thinking about the kind of the environmental impact of AI-enabled business activities. So really thinking holistically about decision making about the use of technology as well as the kind of impact it might have on the environment. So some of the things that we're kind of seeing and the need for is a much more kind of joined up view about sustainability in an organization, a far more strategic view, actually. And from our perspective, we're seeing a lot of companies kind of get to this part on their sustainability journey where arguably some of the easier wins have been achieved and overcome, and actually it's now got to the bit, it's almost like that kind of wall before really getting to the hard stuff, which is about your corporate strategy and making sure that all the right conversations are sort of factoring sustainability into decision making. So, financial planning, strategy planning, board governance and oversight. And that's what a lot of organizations, I think, are struggling with almost, because actually that's really hard. That's the hard stuff, and can take a huge amount of effort to actually get right. So those are some of the trends. I'm getting the eye. So I suppose just to close, those are some of the big themes that we are seeing as important, we're paying attention to, and we're also trying to help our customers navigate, whether those customers are companies listed on the stock exchange, or they're the customers of our data business or index business or our trading business. These are the sorts of things that they are telling us that are important, and we're also navigating ourselves. So, Tim.
Jane, thank you very much. Another 2 hours on this, we absolutely do. Absolutely, yeah. Any hands up for a question for Jane? We've got a microphone. Laser sharp questions and laser sharp answers, please.
So a legal opinion out a few months ago stated that directors have a duty to consider nature-related risks and opportunities. And what we're hearing now is that investors can decarbonise their portfolios. They can't denature them. I'm just surprised that nature-related themes is not coming through.
Yeah, I think nature is an interesting one. So we would see that actually nature is part and parcel of the climate transition. And I think certainly we feel as if that the nature component should be part of any organisation's climate transition plan, actually, because they're so close and intertwined. So we wouldn't put it out as a separate theme. But you're right. I mean, I think on the nature debate, there's a lot around kind of how do you measure it, and actually is it just, I think organisations are struggling with the difference between a dependency on nature and then a nature impact and risk. So I think we're still in the foothills, actually, of trying to figure out nature. But TNFD is obviously something which is helpful to create a framework of thinking. And, I think ISSB and TNFD working closer together is going to be quite interesting.
I'm going to squeeze in one more very concise question and a very concise answer before we must move on.
Sorry.
No, it's great. Thank you.
Thanks, Jane. I'm going to try and be concise. So I just want to talk about speed. For CSOs and global corporates, in your opinion, what would be the one thing that is going to accelerate businesses moving further and faster? We know there's lots of complexity, but in your opinion, what is it that's going to really tip the balance in terms of speed? Because we know we haven't got time.
Corporate strategy. I think it's absolutely vital. I think until an organisation has a proper conversation around the value creation at risk from sustainability in the context of corporate strategy, then I think we're always going to be at that place where there's not that impetus to move. I think as soon as management teams and boards kind of the penny drops about this is about value creation and either the ability to create more or create less, then all of a sudden that changes the conversation. That's my perspective. But.
Jane, thank you. That's a brilliant segue into our next spot. So you've done us a real favour and help. Jane from LSEG, thank you very much indeed.
Thank you.